So guys, in this session, we'll be learning about double entry system and types of accounts. We'll be learning these two topics. First, let us understand what is double entry system. What do we mean by the term double entry system? Double entry system means every transaction affects two accounts, that is, has a dual effect where one account is debited and the other account is credited. So whenever we do a transaction, it will always affect two accounts in which one account will be credited and the other account will be debited. Let's understand this with an example. Let's say we purchase some assets, for example, machinery. We purchase few machinery for our business. So in that case, since machinery is an asset for us, the machinery account will increase. That is, the assets will increase. But to purchase the machinery, we use some cash or bank balance. Let's take it as cash. Since we have purchased the machinery, the machinery account will increase, but the cash will decrease because we have used the cash. So again, in this case, two accounts are affected. One, the assets account and the cash account, where assets account will increase and the cash account will decrease. Let's take another example. We had land worth 10 lakh rupees. So we sold that land. In that case, our assets will decrease, but the bank balance will increase. So when we sell the land, we'll get some money, or we can say we get some cash. So our cash balance will increase, or the cash account will increase, but the assets will decrease. So by this example, you can understand that every transaction has a dual effect, that is, affects two accounts. So if we summarize this, one account is credited and the other is debited. In the next video, when we are learning about golden rules of accounting, you will know when you should credit an account and in which case you should debit an account. Next, both credit and debit value will always be equal. So now we purchase goods worth 10,000 rupees. So you will credit one account and debit other account. Both the debit and the credit value should be same. Only in that case you will be able to maintain the basic accounting equation of assets is equal to liabilities plus equity. So to understand this, let's take an example. Let's say you had some accounts payable. The accounts payable is a liability, so it will come on the liability side of the balance sheet. And you had some cash, which will come on the asset side. So when you do the payment, the accounts payable will decrease. That is, your liabilities will decrease. But to do the payment, you use some cash. So the cash account will also decrease. So both the accounts payable and the cash, that is, the liabilities and the assets, both will decrease. Hence, the balance sheet will be balanced and we can maintain the basic accounting equation of assets is equal to liabilities plus equity. So that is it about double entry system. In the next video, we'll be learning about golden rules of accounting. Before that, you need to know about the types of accounts. There are three different types of accounts: personal account, real account, and nominal account. Let's understand them. First is personal account. It is mainly associated with the balance sheet. A personal account is an account connected to all persons like individuals, firms, and associations. Example, suppliers, customers, bank, etc. So any account which is linked to a particular individual or an entity is a personal account. For example, your vendors, your customers, your bank, or any individual entity, it is a personal account. Next is real account. This account is also mainly associated with the balance sheet. It is an account relating to assets and liabilities other than people's account. Example, land and building, accounts payable and receivable, etc. So any transaction which is associated with the accounts of the balance sheet, that is the assets and liabilities, those accounts are examples of real accounts. Nominal account, this account is mainly associated with the profit and loss account. That is, it is associated with the income and expenses of the business. For example, the purchase, sales, any payment you do, such as electricity and water bills, etc. So these are the three different types of account: personal account, which is linked to any individual or entity; real account related to assets and liabilities; and nominal account, which is linked to the income and expenses of the company. So guys, that is it for this video. In this video, we learned about double interest system and the different types of accounts. In the next video, we'll be learning about the golden rules of accounting. So that is it for this video. Thanks for watching.